Looks like we got some early birds. What's going on, Boosted? What's going on, Michael Johnson? Boosted says, here, here, let's get this thing started. Michael Johnson said, let's do this. Just gonna wait like 2 more seconds, let a few people join. Get the chat popping. Michael Johnson's Big Mike. Big Mike, what's going on? What's going on, Boosted? Dave Coffin says, looking forward to the percentage drop buy-in method. So give everyone a couple more seconds to join. What's going on, Adam? What's going on, Dave? Big Mike, what's going on, Boosted? What's going on, Penny Boys and Gals? It's your boy, What the Duck here, and it's time for another trading class video. This is going to be a live stream. We're going to be going over the risk-to-reward ratio. We're going to be going over the drop percentage buy-in method, as well as doing nightly due diligence and note-taking. All this kind of geared towards someone who is working 9 to 5, or maybe they have a family or whatever it may be. They can't be looking at the charts all the time. Maybe they don't know the charts yet, so maybe they want to be able to trade without having to stare at charts 24/7 and know all the indicators. So that's what we're going to be focusing on tonight. What's going on, Agent Penguin? What's going on, Demon the King? So let's get right into it. We're going to go ahead and start off with the drop percentage method. This is the drop percentage buy-in method. So your first step is you decide your bankroll strategy. What this means is you decide how much you are going to be putting into each alert. So if you have a $1,000 account, you have to decide how much money am I putting into each stock. So what we recommend is anywhere between 5% to 15%, with 10% kind of being that the recommended number. 5% if you're feeling a little bit on less confident, and 15% if you're feeling super confident about the stock, and then 10% kind of in that in-between area. And remember, this is just a recommendation. You can do whatever you feel like doing. That is just what we recommend based off of just people's years of trading and what we've researched and what we've found. So that's your first strategy, is just to know, all right, how much am I putting into this stock? All right, cool. Next up, you have to decide what your buy-in percentages are going to be. What this means is we at Penny Boys, we don't just go all in on a stock. Like if a stock comes up on our scanner or an alert, we're not just buying 100%. Like, so let's just say you have a $1,000 account, you're going to put 10%, that's $100. We're not just putting $100 right away into the stock, because what we do at Penny Boys is we do not chase stocks, and it's not a pump and dump type of scenario. What we're trying to do is we're trying to find stocks that are going to be growing in the long term, not just that day. It's not going to be like a this is the top 4 stocks on Weeble's volume list, or the top 5 gainers. Let's just chase those stocks. What we do is we find stocks that people maybe haven't found yet, maybe haven't done enough due diligence on, and we get in early. But what that means is that we're going to be getting in during the consolidation period of that stock. So the stock might go down a little bit, it might go up a little bit, but we don't know yet because we're getting in early, before all the volume drops in, before everyone else starts chasing it and pumping it. We're getting in before all of that, so that we can make the best potential profit. And we had the least amount of risk by going in slow, because if it doesn't work out, because not every trade works out, you're able to get out with minimal loss. So, Joshua, what's going on? You're watching the Super Trend video? Yeah, that's like a 3-minute video I just made. It's a bonus PBU class going over the super trend I made available to free members as well. It's just kind of a quick little bonus class. But welcome to the stream, Josh. So yeah, so for the drop percentage, is really just about, or with the buying method, is really just about getting the best average possible with the least amount of risk because we're trying to get into the stock early. So you had to decide. Sorry, so you know now. All right, I'm not going to go all in at once. I had to decide what my buying percentages are going to be. That can be 25%, 25%, 50%. Meaning your first buy will be a 25% buy, which if you're putting $100 into stock, that'd be $25. Then your next buy would be $25 again, 25, 25, and then 50 would be $50 would be your last buy. Or you can do 10%, 10%, 10%, 20%, 50%. You can do 20%, 30%, 50%. You can do whatever you like, whatever works best for you. A lot of that comes just from trial and error. I personally have a trading plan, and I switch it up every 20 trades, and I kind of see what works best for me. A lot of people like to paper trade when they do this. That way, they're not using their own money when they're trying to figure out what buying percentages work best for you. But that's it's always up to you. So you decide your buying percentages. You decide how much you're putting into the stock. Now you're going to be inserting the entry price into the spreadsheet. Now, what does that mean? Well, let me pull up my screen. So what I mean by that is I have this PBU note-taking spreadsheet. It's in the PBU class area in our Discord. So if you go to our Discord, you go to PBU class channel, you'll be able to get this blank spreadsheet. And what I mean by enter the ticker, so let's just say the ticker is WTRH, right? It's like waiter. It's like a delivery, like an Uber Eats kind of deal. All right, so they're at 332 as a current price. So it automatically tells you that. You're putting in $100. That's how much you're going to be putting into the stock. That's 10% of your portfolio. And so what you're going to be doing with the drop percentage is deciding what your drop rate is going to be, which means every time the stock drops X percent, I'm going to make a buy. So let's just say that the stock, you think that it's not going to consolidate too much. You think it's going to stay in a pretty tight trading zone before running or before going to your target. So maybe you only want to do 1%. Or maybe you think it's going to consolidate a decent amount, but you don't think it's going to go down too hard. That's maybe you do 1.5%. Maybe it's a really beaten down stock, and you think it's going to go down pretty hard before it comes back up. So maybe you want to do a big one like 2% or even 3%. So what this means is this is how much your drop rate percentage is going to be, and you base that based off of how confident you are in the stock. If you think it's going to go down a lot, you might want a bigger drop percent rate. So what you're going to be doing is you have your buy-in. So let's just say that you bought in right now, like right now. It's 332. You're buying in right now. So what this shows you here is exactly. So let's just say you're going to do 10%, 10%, 20%, 50%, and you can change these. This is just an example. It tells you exactly. It does all the math for you. It tells you exactly how many shares to buy and at what price. So then what you do is you just go into your Webull, and you can do this either at let's just say you work 9 to 5 and you have Webull, so you go in at 6 p.m. After hours is still going, and you want to make some buys. And you go on at 6 p.m. and you just go into Webull and you say, all right, and you do limit buys. You say, I'm going to do 3 shares at 3.32. I'm going to buy 3 shares at 3.25, 3 at 3.18. I'm going to buy 6 at 3.12, and I'm going to buy 16 at 3.06. And you put all those orders into your Webull as limit buys, and you put it like good to close with extended hours and all that. And then you go have dinner, enjoy time with your family, get to bed early for the next work day. Or let's just say, you work 9 to 5, you want to get up a little bit early before work. You can do the same thing and just, put this in and put all these buys in the morning before you go to work, come back, see what happened. Another thing you can do as well is set alarms on your Webull just in case it does go down while you're working too. That last buy, you want to know when you're in 100%, so you can just go to your Webull app and set an alarm for when WTRH goes down to 3.06. Then ding ding ding, it tells you, hey, WTRH is at 3.06. You know to yourself now, oh, because of all my buys I have in this morning, it means I'm in 100%. So maybe you can sneak to the bathroom or whatever, and then put in your stop loss and put in your take profit based off of your risk to reward ratio. And what I mean by that is, let me come back into here, risk to reward ratio. So once you're in 100%, you decide, or before you even start getting into the stock, you want to have a trading plan with your risk to reward ratio. So you decide what your risk to reward ratio is before you even start trading. This is when you're making your trading plan, which we do in PBU. So you decide how much risk you want, how much reward you want, Let's just say the past couple trades you've been you've been doing pretty well. You've been picking the right stocks, whatever it may be. You've been making more profit than you have selling stocks for losses. So you think, all right, I'm doing pretty well. Maybe I want to have a 1-to-1 risk to reward ratio, meaning that all you need to do is just make more than 50% of your stocks as profit or as wins, and you're going to be profitable. So 1-to-1 risk to reward ratio means you're going to have the same stop loss percentage as your take profit percentage. So let's just say your percentage is going to be 10%. Once you're in 100% of your stock, you put in your stop loss and your take profit. Your stop loss will be 10%, your take profit will be 10%. That's a 1-to-1 risk to reward ratio. It can be 7% stop loss, 7% take profit, 5%, 5%. As long as it's even, that's a 1-to-1 ratio, and that's 50%. You need to win more than 50% of your plays in order to become profitable with that ratio. If you want, you can do a 1-to-2 ratio, which means that let's just say you have a 5% stop loss and a 10% take profit, because 1-to-2 means one risk for every 2 rewards. So your reward is double your risk. So you're only risking 5%. Your reward would be double that, which is 10%. So that's a 5% stop loss, 10% take profit. And you just you sneak to the bathroom. You decide you can go into Google and just say type in a percentage calculator, decide where those prices are going to be, and you can just go into just put in the cells, put in the stop loss, and then go about your day. You can also go into Webull on the app and if you go into your homepage, and there is an explanation of this in the PBU Learning Center. But if you go into your homepage where your portfolio is and all the stocks you have, you can just click one of the stocks and just click close on the bottom, and then click take profit / stop loss. And that way, that's how you're going to be able to put in that stop loss and your limit price at the same time for your sell. And it even tells you your estimated loss, so you could know, all right, I'm in $100, so my estimated loss needs to be $10. My estimated profit needs to be $10, because that's 10%. If that's going to be your goal is 10% profit, 10% stop loss. Or you would do, if it's 7%, you would just do $7 loss, $7 profit. So that's how you do that as far as the using your risk to reward ratio and implementing that into this drop percentage trading strategy. I'm going to get rid of that. So like I was saying before, you want to set your limit buys. You can just do that all at once. And then you set alarms for price increases or decreases. So if the price goes to where you would be 100%, you want to have an alarm for that. Also, if the price starts to go up a certain percent, you might want to be aware of that, because the stock might be done consolidating and might start going up. You want to know when that's happening. Set an alarm for that. So it's pretty easy. You just you set all your buys before work, or when you get home from work, and then you set some alarms, and then you go about your day. And then, like I said, like it says in the on the screen, let the magic happen. It's just as easy as that. And as far as the risk to reward ratio goes, that's really up to you what you choose to do. I personally have done 1-to-1 for 20 trades, and it's worked out pretty well. I've done a 1-to-2 for 20 trades, and that actually also worked out pretty well. So I'm still trying to figure out what my percentages, what works best for me, based off of my note taking, which we're going to go over next, is note taking especially if working a 9-to-5. So in this PBU note taking spreadsheet that I'm going to be giving you guys all, or actually it's already in the PBU trading class area, what you have here is your budget. So right now I'm using a $1,500 account. You just put in how many positions you're in. So these will be blank in the spreadsheet. Actually, let me show you the blank spreadsheet. Oh, actually, no, this is a blank one. All right, so you would just put in your budget. So let's just say you have $1,000, and you're going to get into 7 plays. So that means $1,000, 7 plays, $100 per play, and a 10% buy would be $10 initial buy. What this is this calculates how much cash on the side you would want to have if you're going to be doing around 30% cash on the side. We do recommend putting some cash on the side. So let's say you have $1,000, maybe $300, $200 on the side, not in stocks. That way, in case something crazy happens, like Apple or Tesla decide to do a forward split, or there's some like a huge news or whatever it may be, and you want to be able to get into it, you want to have cash available. That's what the cash on the side is for. So you put in your budget and how many positions you want to be in at a time. And then up here is going to be your watch list, and then down here is going to be the plays that you're in, that you're tracking. And then you have your post trade notes where you put in the ticker. Did you follow the plan? How much did you make off of it? Entry date, exit date, that way you know how far apart it was. Maybe you got in too soon, if you had a loss, maybe you waited too long. If it ran before you got in, and that's where you put the notes. You said, hey, maybe waited too long, didn't get in 100%, or took got in too quickly and it hit the stop loss really quickly. And then you have a day by day just journaling. I sold these stocks. This is I was feeling this way. Whatever trade psychology. You can put your trade psychology notes in there. You can put in what you did wrong, what you did right. That way you can that way you can review it and learn from it either every week or every month, however you want to do it. But as far as due diligence goes, so what I would do is at the beginning of so I'm going to show you mine. So this is mine. This is the watch list that I have right now. It's just a bunch of, at the end of the night, what I do is I just go on the computer and I go into Discord. I go into the alerts. So I would go to like alerts by leaf, for instance, and I would just start scrolling and I would find different alerts. And it's just everyone that I'm not either in or that hasn't hit profit. So anything that hasn't already hit profit and that I'm not in yet, or that I don't have on my watch list, I throw it in there. So for instance, I'm going to do this one, IQ. So you just put in IQ, and then it'll tell you the current price, and then you want to put in the alert entry so you can see where it is based off of the current price. So alert entry is 1741, and this is how I would decide if I want to keep it on my watch list. So right now it's only 0.29% away from the entry, so that this actually could be a ideal alert still. So then what I would do is I would do some due diligence. I would go to the chart on Webull or whatever you use. I'd use all the indicators that we go over in PBU, and I would look at that. Maybe I'll go to FinViz and see what the relative volume is, see what the RSI is, maybe see what the analysts are saying, see what kind of news is happening, what people have been thinking about it. Like this news just came out. Is it a good stock to buy now? It went down 18% that day. That's good to know. You maybe want to go into TradingView and see what you can go to IQ, search it, and then you go to Trade Ideas under IQ, and then it'll give you all these people's different ideas about it. IQ looks great. Algorithms around the world love it. Price got sold off after the earnings and dropped. This is 14 hours ago. I wouldn't base your buys off of these comments. This is kind of similar to Webull comments or what was it, StockTwits comments, but this one's a little bit more the people who are posting these are like longtime members, so it is a little bit more reliable, but still based off of your own due diligence. But it is still good to know market sentiment, know what people are thinking about, know what prices people are looking at. That way you can base your personal entry based off of that, because just because their alert is entry is a certain price doesn't mean that you're going to have to get into it that certain price. You want to do your own due diligence and base your entry off of your own due diligence. You can definitely use the ideal entry or alert entry as a basis, but it's good to be able to know on your own when you want to get in based off your own due diligence, which is why we teach what we do in PBU, so you can become your own trader and just use these alerts as a guide as opposed to like the thing that you need to be following word by word like a Bible. It's supposed to be more like a guide. So that's how you do your quick due diligence, and that was IQ. That was like that took maybe like 2 minutes. So for me, I would just look quickly to see what happened. It looks like it went down. That means it could be ready for a pushback up. So I would go to the I would probably go to the daily first and check out the daily. And let me get rid of all these indicators. I would see how it's doing the daily. It looks like it's been just. That's interesting. Yeah, it looks like it's been going just up and down between this resistance level, the support level, and right now it's trading at. Let's see. Let me get rid of the moving average. It's trading at 1736, so it's at near that support level. So maybe I would, put it on my watch list. Maybe I wouldn't put a buy in right now, or maybe I'd just do a 10% buy, which is a quick buy that you just want to watch the stock, so you have it in your the amount of plays that you're in, because you can I only want to be in 7 plays, so maybe I want to watch it and know that I want to get into it later, so maybe I'll just make a 10% buy. What's the worst case scenario? It goes down 10%. I'm only in 10%, so if you have a $1,000 account, you're losing $1, so not a big deal. That way you have it in your portfolio already, and then you're watching it, you're aware of it. That's another option. So that's just how you do some quick due diligence if you're working. What I would do is I would either in the morning or the night after, you just put all those, you just go to one by one, you just go to the alerts that you can find. There's usually like 3 or 4 of them probably that haven't already hit target, and then it usually takes me like 5 minutes to put 4 alerts in, which is usually about how many I put in per night. And then the day after, so like let's just say I put this in last night, then the next morning I'll wake up and I'll see which ones are close to target still, or sorry, close to entry still, and I'll put the price. If you're doing the drop percentage, I put the ticker in here, put the current price, put my buy-in price, and then I would just put in all my buys and sells, or all my buys and my alarms, and then I would go to work. And I would work, and I wouldn't have to look at my phone unless my alarm goes off that it hit my 100% area, or that it's starting to go up. Maybe it's starting to do that upper confirmation. So, trading definitely isn't easy, but this is definitely, I think, a couple tools that you can use that will make your life easier as far as trading goes while working 9 to 5. So that is the note taking. You also then do your post trade notes. This is what I do just so I can kind of like see what I did wrong, what I did right. Maybe if you're doing a drop percentage, it's a little bit easier because for me, I'm doing notes based off of, because I'm buying based off of support and resistances. So for me, I'm putting notes in, like, if I got in too fast, or, I read the wrong support. But if you're doing a drop percentage, you can just say, drop percentage for this type of stock. It had a lot of volume. I did a high drop percentage. Next time I'll do a lower one if it already has volume. Or, whatever notes you can, whatever you can take away from each trade is good to put into this. And so the left is for each trade. You do your P&L, and then the right, I'd put my P&L as far as the total P&L goes, not per trade. And then I just say kind of like what happened that day, if I follow my plan. And then that's just how you kind of just note take, and that's how you can quickly just kind of see how you're doing. And that, I believe, is that. So I do know that we have our 9:30 p.m. live stream coming up. It's going to be in 3 hours. We're going to be going over all the test scores, all the quiz scores, or all the quiz scores, and then be giving out the test. So I hope that you guys all join me there. But this is just a quick little stream on how to do due diligence, how to use the risk reward ratio for your plan, how to kind of note take, and I will put that spreadsheet, like I said, the blank one, in the trading class area in the PBU class channel. So that's that. I hope to see you guys Thursday, and I hope that you all make some bread.